You guys, oh, let me mute myself.
Greetings, everybody. We're going to be getting started in just a few minutes.
I wanted you to know that I'm on camera now. So if you
Everybody, we'll be starting in just a few minutes. Appreciate your patience. Be getting started in just a couple minutes. Appreciate your patience. Just waiting for everybody to join. Still waiting for a few more people to join. Appreciate your patience, but we'll be starting momentarily. There we go. All right, we're going to be getting started in just a minute. Our speaker today is Tanua Thrash Intuk from LISC, Los Angeles. Today is the second day of our three-part series discussing financing options for nonprofits. Regina, if you're able to speak, you want to kick things off here?
Everybody, just wanted to say thank you for joining us. Oops.
You're all good.
Great, thank you. Good morning, everyone, and thank you, Erin. Welcome to the second in our three-part series on making sense of some of the opportunities that are coming online. We imagine that your mailbox, like mine, is being bombarded with lots of information, and so we're hoping that this series is helpful for helping you sort out what the latest information is and also what might work best for you. Yesterday we had the Small Business Development Center. Today we're excited to have Tanua from the Local Initiative Support Corporation. Tomorrow you have a day off from us, and then on Thursday the people from NFF will be talking about some of the tools to help you make decisions about what's right for your organization. This would not have been possible without Citibank, LA County's Office of Strategic Partnerships, LA In Sync, and the Ralph M. Parsons Foundation. So thank you to all of our sponsors. Our partners at the Central City Association, the LA Area Chamber of Commerce, Southern California Grantmakers, and the LA Economic Development Corporation have helped us at the Center for Nonprofits spread the word. So we're excited to have Tanua with us today. She has built her career on innovative financing strategies around affordable housing, economic development, and that experience will certainly come in handy as we talk and learn together today. So Tanua, thank you, and let's get started.
Great. Thank you so much, Regina. And thank you to your team for helping to get this together. And of course, we're grateful for all those sponsors who jumped in and quickly made sure that we were able to get this information out to our friends in the nonprofit community. So as was stated, I'm Tanua Thrash Intuk. I'm the executive director for the Los Angeles office for the Local Initiative Support Corporation. And today I will talk you through the SBA PPP program, some things to think about as a nonprofit, as well as some of our bridge products that LISC offers for nonprofits who need capital at a moment like this. So let me just start out. I will give you a sense of what the agenda will look like. I'll try and chat for maybe 15 or 20 minutes and look forward to your questions. I believe Erin or another member of the center's team will help me with gaining a sense of what your questions are and answering those. So I'll talk a little bit about LISC, so in case some of you don't know who we are. I'll talk about the PPP program and how nonprofits might consider applying, and I'll talk about bridge financing and of course save time for Q&A. So LISC is a national organization. We're a community development financial institution, and our mission is to work with our residents and partners to forge resilient and inclusive communities across America. We want to make sure that every place is a great place to live, work, visit, do business, and raise a family. And so we do that by investing capital and capacity building activities within the nonprofit community, but also to some extent within the small business community. Just to give you a sense of what we have done in Los Angeles, just this last year, the LISC Los Angeles office has done a little over $33 million in affordable housing and small business lending. We have provided more than $800,000 in grants to community-based organizations. As an intermediary, we often are provided with grants and drive an agenda and provide those out to local organizations. And we also do a lot of capacity building. So you can see from our affordable housing training, we have supported more than 400 individuals through that training, and also through our other economic development and capacity building trainings, more than 270 individuals. So that's a little bit about who we are. Today, we're going to talk about a first product is the SBA payment, or really Paycheck Protection Program. So it is a loan, but it is designed to provide an incentive for small businesses and nonprofits to keep workers on their payroll and to cover costs during this time period, specifically through June 30th, 2020. So for a nonprofit, one of the things that I'm looking at and ask you to think about is that the PPP program is kind of like receiving a grant. So when you receive a grant, you know that you are going to provide a certain set of services that the funder is anticipating that you're going to do. And by providing those services, you will be able to keep those grant funds and count them as income for the organization. Similar, the PPP program is requiring that you spend it a certain way on certain activities. And of course, if it's not spent that way, much like a grant, if you spend it incorrectly, there may be a need to repay it back. So who is eligible for the PPP program under the CARES Act? You have to have been in operation as of February 15th of this year. And there's a specific call out in the legislation that says you're either a 501c3 or a 501c19. And there are some other variations of nonprofits, and additional clarification is coming out as to whether your nonprofit qualifies. This program is 100% guaranteed by the SBA, and 100% of the principal can qualify for forgiveness. There's also a possibility that a portion of any interest accrued could also be forgiven as well. But again, it's completely guaranteed 100% by the SBA. And if you spend the funds correctly, 100% of the principal can also qualify for forgiveness. So what are your steps as a nonprofit? Certainly engage your board. It'll be critical to have a board resolution that says that you, as an organization, have the authority to go out and apply for this resource, the amount of it, and some sense of what the board's expectations are about how you plan to use those funds. Authorized members of the organization, including board members, will be expected to help monitor how these funds are spent. So having a board resolution will be critical. It's important that you start to gather documents to figure out what's going to be the maximum request that you're able to go after for this program. And the third is apply now. This is a finite amount of resources, 349 billion. Sounds like a lot, but there's a lot of nonprofits, small businesses, and other entities that qualify for these funds across the country. And so it's really critical that you apply now. If you happen to have a banking relationship, start there. And if not, part of what will be coming out, I would expect over the next couple of days, besides visiting the SBA website, is that you should begin to look for an SBA lender who is certified already by the SBA. So move quickly. So loan amounts are based on payroll costs. Excuse that zero, because we know you're going to have more than a zero in your payroll costs. And the maximum loan is 2.5 times the average monthly payroll cost a year before the date of the loan. So those of you who were in operation in all of 2019, there's a date around between February 15th of 2019 leading up to just about today, where lenders will be looking at what was the average payroll cost, fully burdened, that you have experienced, divide that by 12, and then we'll be able to get 2.5 times that to try and understand what is the maximum you could potentially qualify for. So what's allowable, or what should you be including in that payroll cost? So salary, vacation, all wages, allowance for dismissal or separation, healthcare benefits, retirement benefits, and payment of any state or local taxes assessed on employee compensation. This particular policy also caps the amount that you can request based on the amount of what an employee makes in salary. So if an employee makes in excess of $100,000, that is the upper cap. So if they make more than that, that will not be counted in your average payroll amount to get your 1 month average monthly to multiply by 2.5. If you've got any other taxes imposed under any of these chapters listed here, or an employee whose residence is outside of the US, they are not eligible to be counted towards your payroll costs, or any qualified sick leave that is associated with other programs. So let's just take an example. So you're a small nonprofit agency. No employee within your organization makes over 100,000. So it just so happens that your total annual payroll is 120,000. If you divide that by 12, then your average monthly payroll is 10,000. And then you take that and multiply it by 2.5, and you get a $25,000 maximum loan that you can take out. In this example number 2, you're a mid-sized nonprofit organization, and you have some employees who make over $100,000. So let's say your total payroll happens to be your total payroll happens to be 1.5 million. And then we ask that you subtract any compensation in excess of $100,000 from that total payroll cost. So let's say it happens to be 300,000. That leaves you about 1.2 million in an average annual payroll. Divide that by 12. That should be a little higher. And then you've got, you multiply that by 2.5, and you've got a maximum of $250,000 that you are able to take out in a loan through the PPP program. So once let's say you actually able to go through, you get the application done, you're successful, and you receive the PPP loan. These are the permitted uses of that loan. So you can use it to pay payroll, including healthcare benefits, any interest on a mortgage, interest only, not the principal. You can't even, prepay part of your mortgage. It really is the interest. Rent, utilities, and interest on any other debt that you can show that you incurred for the business before February 15th, 2020. Then there's the loan terms themselves. So this will carry a 1% interest. And this is essentially if if the loan is not forgivable, and even if it is, for the first 6 months, there is no payment, but the interest is accruing. And it's right now, according to the SBA, it's at 1%. It's due in 2 years, and there's no fee or prepayment penalty fee. So there's no loan fee. You should not be paying anybody any fees or any points on this loan. And once you get it, and we'll talk about forgiveness, if you decide you want to pay it back, there'll be no prepayment fee for that. There's no collateral, and this is non-recourse. I already talked about the fact that there is no payment for 6 months. Non-recourse, as you can imagine, for nonprofits, we're not used to putting up guarantees and personal guarantees and that sort of thing. So this loan works for us in that way. So keep in mind that the SBA guidelines say that this loan is based on your organization's and the impact that COVID-19 has had on your operations. It is not on your ability to repay. This is not underwriting in a typical way that says, what is your source of repayment for this? The federal government is counting on us to use this in the way that they have set out. Keep in mind that loan forgiveness is not automatic. So you must apply for loan forgiveness with the lender that you work with, and you must produce documentation verifying how you spent the dollars for the program. So on the areas that I described as allowable expenses, you have to be able to show canceled checks and various other types of receipts to show that you spent the funds in the way that the program had required. And if for some reason you do not spend it that way, then the third bullet here applies, and that means that your loan forgiveness can be reduced. So you wouldn't get 100%, you'd get something less than that. So what would impact a loan forgiveness? One is payroll. So if you had 100 staff prior to February 15th, and you took out an amount of the loan based on having that 100 staff, and yet you only hire back 80 people, you only pay 80 people, your loan forgiveness will only be made on those 80 that you paid out. The other 20 that you are not paying and not providing additional support for, that portion of the loan would not be forgiven. If you reduce your salaries, again, this is based on how much you are paying in your payroll. So if you had folks who you hired back, but you reduced their salaries in excess of 25%, then your loan will be won't be forgiven accordingly based on that reduction. And then the other area is not to exceed paying more than 25% on non-payroll expenses. So there was the payroll and the health benefits, all of those things. And then there was the interest and the rent and the utilities. In order to try and maximize encouraging people to use this for payroll, you cannot spend more than 25% of the loan on non-payroll expenses. To the extent that you do, your loan forgiveness will be reduced based on that. So these are the two important numbers. Spend as much as you can, 75% on payroll costs and only 25% on. The board should also be prepared to certify that the documentation is true, correct, and used in accordance with SBA guidelines. So once you've gotten to a point where you're ready to forgive, you're going to be going back to the board and having partnership with them and ensuring that everything that's being presented to the federal government and the SBA is true and correct, of course, to the best of your knowledge and abilities and is in accordance with the guidelines. So that's all that I'll talk about related to the PPP program.
Noah, can I ask a couple of questions that have come up?
Okay.
Oh, sorry. Over the last 24 hours on the PPP program, a few questions have consistently come up, and I thought before we switch to bridge loans. The one question was about, is there a resolution template? I know that we have one. We can include it in the deck. But there was also some questions about who's the owner. It seems that some of the documents were really set up for small business more than a nonprofit. And as they're adjusting and things are changing, is the board the owner?
So I don't have an answer for that question. I'll definitely jot that down. I would think that typically based on, going after loans and other, formats, it's a combination of the lead executive and the executive committee. So being the board chair, the vice chair, the treasurer, for example, tend to have sort of the co-responsibility of being owners of the organization.
Okay, and then another hard one that seems like it still needs some translation on the nonprofit side is some positions are grant funded. So they would be part of payroll, but they're funded by another source. How do they fit or not fit in this program?
So, part of the spirit of the program is this concept of, would it be difficult to pay those people, or would you not be able to pay those people but for these resources? That's essentially the way we've been thinking about it. So If you've got another source, and keep in mind, you don't have to take the maximum amount, right? So you don't have to take 2.5 times. So you want to be careful about how much you take, but keep in mind that you cannot go back. So if you apply and you take whatever you take in terms of the up to the max that you can take, you cannot go back because you need more. For the purpose of this loan program, I would look at it as a but-for. So if you have somebody who's funded by something else and there is an opportunity for them to continue to be funded and you don't see the ability to be able to use the funds in order to, pay for them, then you might not take out that max amount. Of course, that person may still have other things that are associated with their position that are not paid by that grant. So some of the utilities, the rent, and all those other things. So you could take it for that. But this is, let's say you've got a membership base or client base, or, those are the kinds of things. Even, fundraising during this time is going to be difficult. And maybe there's an expectation that you'll be able to bring in a certain amount during this time. And if that's not happening, but for these resources, you probably would lay off that person at least for this period of time.
And then one of the comments said that their legal counsel said to put not applicable for the owner question. So sharing that. And then a few questions came up about a cap in terms of, is there an amount cap or is it?
Yeah, it's a $10 million cap for the program. So, if you've got a payroll that puts you at a 2.5 over, you're at $10 million, then that is the cap. But the cap is a combination of what is your 2.5 average monthly payroll for 2019 or the $10 million.
Great, thank you.
Mind that if you are an organization that has more than 500 employees, for example, I'm not talking to you, I'm talking to folks who have whose nonprofits are at 500 employees or less. There's a different program for those larger organizations that might exceed $10 million.
Great, thank you.
A couple more questions on PPP caps and what can and can't be included. Does the cap of 100K per employee include benefits or just salary?
It is the salary from what I read, because you are, from what I read, it is the salary. There hasn't been any discussion so far that I've seen in the legislation that talks about taking out their benefits. It's focused on the salary.
Gotcha. What about workers' comp costs? Are those included in the allowable payroll costs?
I don't know for sure. It's not called out in the legislation, and I'm not sure if it qualifies under one of the other taxes, paid on behalf of the employee. We'll jot that question down as well.
Yeah, there are definitely a few that we need to follow up on. Of fiscal sponsors has come up a couple of times. Of what if your fiscal sponsor organization, does their maximum employee count against you? Another one here though, does PPP application look at credit score or is that only idle?
Credit score is irrelevant. Again, this is not based on traditional underwriting of collateral and credit score. It is just based on the other C, COVID, and how is COVID impacting your business? Gotcha.
Sorry, a few more. Let's try and get the PPP questions out of the way before you switch gears here. Is there an origination fee for PPP at all?
There should not be. There should be, according to the legislation, no fees collected from the borrower. If someone's asking you for a fee, that should not be the case in terms of the true implementation of this program. So there should be no fee to the borrower.
Gotcha. That makes sense. If you're being charged a fee, it's probably a scam.
And the lender will receive a fee from the federal government. And so that's paid on the other side, but they should not be asking the borrower for a fee up front.
I can help
Makes
you on the
sense.
fiscal sponsor side. If your fiscal sponsor employs more than 500 people, they are not eligible for this program.
All right. I think we're ready to move on then. Shall we keep going?
Sure. So for, again, describe what I described before. If for some reason you would need to lay off people because you are membership based, you need to see a certain number of clients and you're not sure if you can get to that because of social distancing or because of closures, you may be losing revenue for a variety of reasons, and the PPP can help be a stopgap for that. There are other nonprofits that are having other kinds of experiences right now as well. And those are nonprofits who are being asked by municipalities and other partners to take on more work in order to respond to something happening in the market related to COVID right now. And taking on that more work may not necessarily mean getting a grant up front, but needing capital up front to be able to get that work done. So we at LISC happen to offer bridge capital financing to assist, and we've got some products that we're assisting with during this COVID-19 pandemic. So when is the right time to access bridge capital? Essentially, what we are looking for is for you to be able to show that you have a confirmed source of receivables that need to be bridged. And hopefully right now it'll be associated with continuing services or expanding services during the COVID-19 pandemic. So what are some examples of that we've been seeing in the marketplace? So housing services, these are just some examples. So we have heard from partners that they have been asked to provide services and or to support temporary housing shelters by municipalities. That means they need upfront resources. We have talked with other partners who've said that they've been asked to go out and reach out to small businesses to connect them with capital and capacity building resources. We also are hearing from food service providers that they are, being asked to distribute more food and access more food to get them out to seniors or other vulnerable populations. And we're hearing that some nonprofits who have employment and social enterprises, that they're being asked to do construction and cleaning and other social services, again, in municipal contracts that the agencies are asking them to do. Many of us know that those contracts take time in order to move to a point where they actually pay out. And so you need resources up front to be able to pay for staffing. And if this is new staffing or expanded staffing, you're not going to be able to use something like PPP to cover that necessarily. So our bridge loan program highlights. So we provide up to $5 million for bridging these kinds of contracts and opportunities. Our interest rate is anywhere between 5 and 7%, and it's fixed. It's up to 36 months, and we'll take interest only payments payable monthly as you take out the product and start to use it. Our loan fees are approximately 1.5% of the loan amount. And then we do have some legal fees that are on top of that. As far as collateral, we're really focused on the bridged receipts that you have have on the table with the municipality. So we tend to go up to about 80% of what your receivables are as they're coming in. And in some rare cases right now, we might look at real estate collateral, but we're really right now focused on how can we help you continue to get services done and out in the community. So those are all my notes for today, and happy to continue to answer any questions. Please note that Emma Kloppenberg's name is on here as well. She's a program officer with the LISC Los Angeles office and happens to be on the line as well, and may help me answer some questions here and there. Thank you.
Awesome. Yeah, I just promoted Emma to panelist, so welcome to the panel, Emma. You can feel free to join in and answer questions as well. Still getting a fair amount of PPP questions, so we'll take them as we get them. But let's see right now. Here's a question from a consultant. As a professional consultant, their work entails bridging clients' work with their community. Given the social distancing in place, can consultants apply for these types of grants and loans separate from nonprofit organizations?
Yeah, so we, consultants are considered, depending on how you're organized, as an independent contractor, you qualify directly for the PPP program. So, you can apply directly yourself to the program. There are also a couple of grants that have been made available in the marketplace. We are working with Verizon, for example, and at a $2.5 million grant available for businesses at $10,000 each. We'll be announcing winners for the first round within a week, and then we will open it back up for around April 15th. And nonprofits as well as small businesses, including independent contractors, are eligible for that.
Awesome, thank you. Another question, do future grants count as receivables?
Oh, yes, it depends on who it's from. Yes, it depends on who it's from. We can do some underwriting on that. But it has to be something that you expect to receive within the next 90 days.
Got it. So 90 days is the time frame. Are the total LISC funds capped? Should we apply now in case we need the funds or wait until we need them later? And is the company size limit, sorry, that's different. Yes, so are LISC funds capped and should they be now or later?
We don't have, I can't say that we have an endless supply of resources, but we also don't have a cap on saying that we only have this available for the bridge loan program. You apply when it's appropriate and you have a true accounts receivables and that you're expecting and that's come up for the next 90 days. Applying now and you're not going to be able to get it if you don't show that. But if you don't think you need it, I want to be careful about you spending money on fees and going through the process if you are not going to be using the line of credit. But if you have a set of receivables that you're expecting, you've got a new contract or a contract where you think you're going to have to perform more than you had anticipated and need that capital, then let's talk.
Another question on the accounts receivable side, does a lease agreement count for accounts receivable? So you have, you own a property, for example, and you are expecting a lease payment from a tenant, possibly. That's not typical. That's not what we necessarily are looking to bridge. So no. Gotcha. And do you LISC also require a board resolution?
Yes.
Gotcha. We've gotten a lot of questions about the board resolution template. We'll send a follow-up email today with the recording of today's call, recording of yesterday's call, with Tanua's slides, and also the NFF board resolution template that they shared yesterday. Does LISC have restrictions on the types of organizations served, like arts organizations, human services, any particular types?
We don't, but we have the most experience with organizations that are community development focused, but we are not necessarily exclusive. And community development means that anybody who is related to housing, either building, social services, even advocacy related to economic development, so employment services, small businesses, neighborhood development. Those are the ones we have the most experience with, but we would not be exclusive and not talk with a organization who is not one of those type of entities.
Gotcha. How does somebody initiate a loan request with you? Do they go through the bank? Is there an application form through your end? What are the next steps?
So the next steps would be, we look forward to hearing from you via email if you want to reach out, because we'd like to get to know you and learn a little bit more about your request before we actually encourage you to put forth an application. So we would say, give us an email, send Emma and I a note, letting us know who you are, what your interest is in terms of capital. Tell us a bit about the capital that you're hoping to bridge, the contract that you have that you're hoping to bridge, how much that might represent, and then we'll get connected and set up a time to connect to walk through that process.
Awesome. Another question on your loans too. Does the interest on the loan begin from the day that it's taken? Is it a variable rate?
So the interest rate is set once you start drawing. I mean, it's set once you get your loan, and once you start drawing down, the interest rate starts to accrue. We do have, so we're expecting that, let's say you get the loan and your interest rate is set at 6%. Then once you draw it down, however much you have outstanding and drawdown, that's what the interest is accruing on. And then, as you pay it back, you may pay interest only, you may be able to pay some of the principal back. That changes sort of what is accruing on the interest. We do have a non-use fee. So if you go ahead and, get the loan and you don't access it, there is a period of time, if you don't access it within a 12-month period, you will be assessed a smaller fee on that because we've been holding those resources for you, and that costs us to be able to hold that for you.
Gotcha, thank you. I believe this is also about your loan program, but is it FICO score driven?
No, this is more based on traditional underwriting around the health of the organization. Do you have any other outstanding debts? How is the organization performing? If you are to access another contract, do you have the infrastructure as an organization to perform well on that contract? And do you have the fiscal strength to be able to manage that contract and make sure that you're paying our loan back? So it's not credit score driven, but there is underwriting and trying to understand the strength of your organization and your capacity to get the work done and manage the repayment of this particular loan.
Got it. Can a nonprofit agency that's receiving county and city funds also qualify for this loan?
Yes.
Awesome. I like it when they're simple. How do you base the interest?
The interest is what we do a risk-based interest analysis. It's everything from, what is the source of the repayment? How strong is that? It is the organization's previous fiscal experience. Do you have any, cash in the bank? How have you managed? What does your audit look like? Have you had any issues there? What kind of systems do you have in place? So it's a risk-based system depending on, how strong of an organization you are, and what is this receivable that you're hoping to bridge. Emma, is there anything you wanted to add to that?
Yes, I will also add that 2 points. The risk is mostly actually based off of the term of the loan, which in this case, we would probably match to the term of your contract. So the shorter amount of time that our loan is out there, the less risky the loan is for us. And then second, collateral is a big risk factor. So to the extent you do have real estate collateral that you're able to offer against the loan, that reduces your risk significantly.
Got it. Thank you. More loan questions. Can the loan be forgiven, and are people able to negotiate payment terms to lower interest base?
We don't have a forgivable source on this. This is not 100% guaranteed by the federal government, so we're not able to forgive. We'd like to be able to make these funds available for other organizations. Interest rates are not necessarily, they're not negotiable. What happens is, we are able to borrow at a certain rate, and then we put a small amount on top of that. And again, depending on the risk, we have to plan accordingly.
Makes sense. Questions, does the loan have prepayment penalty? And in general, are these instruments and rates your normal offer, or are these special COVID need situations?
So we tend to offer very few bridge loans to organizations. It's a very small part of our portfolio. Given where we see that there might be need during COVID-19, we've been able to open up a little bit larger pie in our portfolio for more of these kinds of loans. So yes, it's something that we do, but it's a very small piece of that. There is no prepayment penalty per se, especially if this as a line of credit. The idea here is that, you pay it back, and if for some reason you decide that you want to end the term, or, we can figure out how to make that happen as well.
Gotcha. Can people use personal real estate or other sort of collateral outside of their nonprofit organization as collateral towards these loans?
It's not something we typically do. So I would say that we'd have to have a conversation.
Got it. Well, we're nearing the end of our questions here. This one might be more for Regina, but we've talked about fiscal sponsors a little bit. I'm curious, aside from the question of, who is applying, and it sounds like it is the fiscal sponsor, what other options do fiscal sponsors or fiscally sponsored organizations have? If you're the organization that has a fiscal sponsor, do you need to apply in coordination with your fiscal sponsor? Can you do anything on your own?
I talked to my colleagues at the end of last week, and I would urge you to talk to your fiscal sponsor, because as you guys know, this is all very dynamic. As we're bumping into questions, in some cases, there's advocacy efforts moving very quickly to help clarify. And as of last week, if you are a fiscally sponsored organization and the fiscal sponsor employs more than 500 people, you're not eligible for this program, and you can't go off on your own. As Tanua was explaining, if you think about what this is about, is helping people stay working so that money keeps moving through the economy. So what I would encourage is that you talk to your fiscal sponsor and see if they're learning anything new as of the weekend. I know everyone's working hard and fast, but I don't have any other intel on that as of this morning.
I know that puts people in a tough situation as far as small organizations that have fiscal sponsors. And so your employees would still qualify for unemployment. But it doesn't, the whole point here too is that we want to see a strong, flourishing nonprofit community. And I know that not having the ability to do that under a fiscal sponsor and access these dollars impacts that, but at least to try and keep employees whole, they would qualify if they were furloughed accordingly for state unemployment.
A couple questions on new employees. One is, as some folks were just hired in late February, any guidance on PPP applications for brand new employees? And similarly, if we needed to hire new employees during COVID, any guidance on that front?
There is a portion of the legislation that allows you to look at 3 months in 2020 from January to mid-March, but I'm not sure if you can use that as your threshold if you were in operation in 2019. So we'd have to check in with some lenders to see how they feel about that, and that way you could capture as many people as you could who you recently hired in the first part of the year. And that was set up so that people, or so that organizations that have more seasonal, ways of hiring, that would allow them to be able to capture sort of the true value of what their average monthly payroll is.
Similarly, question about the date range for qualifying employees. There have been a number of questions about sort of, when people were hired, when they were let go, and how that affects PPP applications.
So I have to look at it because I don't have it right in front of me. Emma, we can probably both look. There are, I would think that it should not matter when people were hired if you're able to average it out over, February 2019, February 2020. So it doesn't really matter who came in or out. You should still, once you get that average, your maximum is at least 2.5 times that to sort of make up for any buffer. So, that should give you what you need and not necessarily worry about when people came in or out.
That's what we've been hearing is don't think about the individual people, think about the payroll amounts.
Gotcha. I know we talked a little bit before about the owner question on the PPP application. One question about that specifically was, instead of putting a person's social security number, can you use your nonprofit 501c3 number?
So I won't be able to answer that one. We'll have to add that to the list of, outstanding questions that hopefully we can get an answer to. I would suspect so. I mean, it's what we look for as a lender. So I would imagine that would be the case.
Got it. And somebody just asked in the chat, I'm not sure specifically for which program, but do churches qualify? I assume for either PPP or for your bridge lending program.
I didn't get a chance to study it, but the SBA did put together an interim opinion regarding faith-based organizations. Sounds like they do qualify, but I don't have a sense of all of the rules and how they're different for churches versus nonprofits. But there is a way for churches to qualify for PPP or faith-based organizations.
Gotcha. Can you speak a little bit to independent contractors under PPP? There have been a number of questions. I think we addressed it a little bit yesterday, but would love a fresh answer.
So, I mean, the read on it is essentially independent contractors can look at themselves as small businesses. And so, your tax return showing what you made and, what you have, done for the year will help be a source of validation for the lender. If you look at what your average payroll is for the year, what you pay yourself essentially is used as part of that. Any healthcare you pay yourself out of the company can be used for that. So really look at yourself, no matter what that amount is. I mean, if you're an independent contractor, and let's just say that's not even your full-time activity, and on an annual year, you are able to bring in, let's say in 2019, you did 25,000 in revenue, and you've got your expenses sort of laid out in terms of some of your hard costs. And then you can create sort of a line of what did you pay yourself or what did you keep, and really use that same model again in determining, what's your 1 month sort of average payroll for yourself multiply that out, and you can apply as well. In the state of California, well, as part of the CARES Act as well, the other route to go for some independent contractors is to look at the state unemployment. That's also another source. So it just depends on how much money you made, and does it make sense to pick up unemployment, or will you exceed what unemployment can provide, and your business is that successful and has brought in that much more money that you could get more under PPP.
Gotcha. So yeah, other programs like unemployment that are available to independent contractors separate from organizations that they should compare. I think this will be our last question now, one on just clarifying the forgiveness of PPP. If it's spent correctly, is forgiveness guaranteed?
Oh, I cannot guarantee anything.
We're going to come back and check with you. Yeah.
I can't guarantee that. According to the rules, if you right now, again, it's dynamic, but the way it's written, it says if you spend no more than 75% on payroll and you're 25% on non-payroll activities, you can document every dollar, whatever it is, cancel checks, all of that. You have all of that documentation, and you can clearly show that that is how you spent the funds, then forgiveness is definitely possible. And again, hold on to it. If for some reason you don't spend it the way you're supposed to, you can either continue to take it as a loan or you can pay it back.
Awesome. Well, thank you so much, Tanua. I hope this has been very helpful for everyone. Apologies if we weren't able to get to your question. We were trying to get to as many as we can. Again, we'll be sending a follow-up email later this afternoon, including a recording of today's call, a recording of yesterday's call, the slides included in today's call, the board resolution template. I'd also say that if you have additional questions, I would direct you to the Center for Nonprofit Management's Nonprofit Answer Helpline, which we'll also include a link to in the follow-up email. Hope to see you again on Thursday. Again, there's no webinar tomorrow, but on Thursday, we'll be reconvening at the same time with the Nonprofit Finance Fund. Regina, anything else to add in close? Tanua as well?
I wanted to say thank you. I noticed this last question. People have laid off employees. Do they need to rehire them back? And that is yes. You would need to rehire folks back, and the portion of time between getting the loan and June 30th when you will have paid them is what's forgivable. So yes, if you've laid people off, you would rehire them. So we look forward to working with you. I do want to say that LISC has not made a decision as to whether it will be providing and taking loan applications for the PPP program. We are still assessing that. It's difficult for a non-bank, unfortunately, to do this, but we're working hard to try and figure out if we can, because we know too many people who don't have banking relationships will be left out and should have access to this capital source.
Well, I just wanted to say thank you, Tanua. We know that bridge loans, lines of credit are always important and really useful at this time, but always. And hopefully we see you all on Thursday to take advantage of the NFF tools for helping you make decisions, and Friday for our lunch and learn. So with that, we'll see you tomorrow, or I guess Thursday.
Thursday.
Thank you all.
Thank you.
Awesome. Thanks, everyone.